Well, I think we've seen the worst of the sell-off, and I do think there will be more volatility. What's interesting to me is that the market is priced in a very good recovery in 2021. And as long as that happens, I think the market, while a bit stretched, is fairly valued. I think what's also interesting is the difference between the growth and value paradigm, which was very, very wide, something like 3,900 basis points. So to me, it'll be interesting to see if the value stocks, which are really more a measure of the general economy, continue to catch up with the large megatech growth stocks.
Kirk, would you be putting money in these value names? I mean, have you been in the expectation that this gap does narrow? Because I wonder how vaccine expectations are playing into this as well, as that seems to be fueling some of the more optimistic calls we've seen on the street overnight.
Well, you're right. And I think a lot of it also has to do with interest rates. In other words, if interest rates stay low, a lot of the financials will continue to have a difficult time just because they will be under pressure. But I do think that a lot of the growth stocks will continue to do very well in a low rate environment. They're long duration stocks, and their cash flows heading out in the future are worth a lot of money. So I think I would expect a continuation of the same, but I do think the gap between value and growth will close.